Well, moving on, it's a done deal between Indiabulls Real Estate and Embassy. They finalized the terms of the merger. The residential and commercial projects will be merged. Let's go across to Vivek Iyer for more details. Vivek?
Well, the much-awaited Indiabulls as well as Embassy Group merger is finally out. The contours of the deal have been given to the exchanges, and in fact, remember, this particular deal gives the Embassy Group, one of India's largest listed residential as well as commercial real estate players, an entry into the Indian stock markets, and it would get listed onto the stock markets once this particular deal consummates. So now what has actually happened is that overnight they have gone ahead and finalized the merger ratio as well as the share swap ratios. Now the combined entity, which will now be renamed as Embassy Developments, so Indiabulls Real Estate would be renamed as Embassy Developments, would have Mr. Jitu Virwani, the chairman of the Embassy Group, would be the new promoter. In fact, the Embassy Group would now own close to 45% stake in the company. Also, some of the existing investors of Embassy have also indicated their willingness to participate, and in fact, Blackstone has already submitted the LOI to participate in this particular merger. The existing investor or the existing promoter of Indiabulls Real Estate will continue to own almost 9.8%. That would be led by Samir Gehlot. The public as well as institutional investors would continue to hold close to 26.2% stake in the particular company. Now, how exactly is the share swap ratio being worked at? Or at the closing of yesterday's price, it's a significant premium. In fact, Indiabulls Real Estate existing shares would be valued at close to 92.5 rupees per share as this particular deal materializes. So significant upside as far as Indiabulls Real Estate current shareholders are concerned. And the total square feet or the total planned area would be close to 80.8 million square feet. So again, a significant rise and expansion as far as both the commercial as well as residential projects of Indiabulls is concerned. It's a very interesting deal.
So basically, it was a strategic decision to merge these two companies. The promoters of Indiabulls Real Estate were looking for an exit out of the real estate business, and we were looking at a listed platform together with one of our institutional investors. And this merger actually brings a lot of synergy to both companies and to the merged entity at the end of it. It allows us to be in different regions of India. We were more Bangalore-centric, and now we have access to Mumbai, we have access to NCR, and these are the markets we would like to be in. And we just realized that the assets of both companies, if merged together, would really make a formidable real estate company. And at the end of the day, we being a very commercial-centric developer and Indiabulls being more residential, this gave us a good mix as far as residential and commercial is concerned. Because we also believe in the coming years, residential is going to be a really strong play in India as far as the real estate industry is concerned. So pretty much, it gives us, like I said, a very good synergy in taking this company forward. Both the merged entity will, land up with a lot of surplus of finished inventory, which generate a lot of cash. And as all of you have seen that, the way of doing real estate business in the country has changed a little bit, and more so after COVID. And this will help us to get into new areas in a much stronger manner with a stronger equity base.